Hello to all traders and welcome back to another video brought to you by Orbex. So we're looking at shares today, Tesla in particular, after their price plummeted 12% yesterday on the back of Wall Street expectations not being met on the amount of deliverables in Q4 of last year. And actually, if we look at most of last year, we're seeing that there was a 65% slump on share price. So it is quite detrimental. You know, we have had a stock split, we have had an acquisition, but at the same time, we've got recession fears and obviously interest rate hikes really cooling demand for Tesla automobiles as well. We had some detrimental news in the UK last week where customers were queuing over 13 hours just to charge their Tesla automobiles. So are there not enough Tesla charging stations around the world? Is it a case of demand is just cooling? Some things are just not really going well for Tesla as well. So we'll see what happens in the next few months. We've got earnings season coming up as well, which could give more of an upside surge for Tesla. However, you know, closing in this $100 handle is not good news for the company, and it is actually hitting a 2-year low now. So we haven't seen this price since the pandemic began. We saw this surge of over $400 during the height of the pandemic, which we'll look at that chart shortly. But tell me what you think with Tesla. We are seeing now new fresh lows on a daily basis. So looking on the charts now, as I said, just scroll back to the last time that we saw these prices. And as I said, it was just in August of 2020 when the pandemic was really taking off. But we saw this surge to the upside, you know, roughly over $400. As I said, though, we've had this stock split in between. The only concerning factor that I can see at the moment is, you know, buyers' demand seems to be waning. There is obviously a lot of negative press for Tesla, but there always has been really with the amount of deliverables. We've had Chinese factories being shut down or being put on pause because of the COVID pandemic. Some of you know, the shortages of these manufacturing chips as well as not really getting into Tesla's profitability. So let me know what you think for the next 12 months for Tesla. But in the meantime, I'm just looking at the moment. We're seeing now this new fresh wave. We're expecting a slight upturn, slight correction here, but evidently we are looking for another leg lower. And if we do crack this $100 area or level, then we will possibly see these fresh lows and the share price can even go lower. Just want to take you on the 4-hour chart now just to see this kind of wave to the downside, because at the moment what we're seeing is, since the fourth quarter began, which was roughly about here, we're just seeing a wave after wave, possibly this 5-wave downturn, and it doesn't look like it's going to get any easier. If we're looking at Elliott waves, you know, after a 5-wave impulse, we are expected to see a turn to the upside. However, this could not be the end of the 5-wave. It could actually just be still in the 5th wave at the moment. So we're just waiting to see what the next move is for Tesla. As I said, earnings season will be something to keep an eye out for, and something really, really advantageous or detrimental for the company. We'll have to wait and see, but it'll be very, very interesting as well. Apple is another stock that I just want to look at because that has hit recently a 18-month low. As you can see here, we're going to pull this right back to the last time that we saw these prices, roughly about just above the $120 area, and that was in the middle of 2021. So we are now looking that Apple is in a little bit of trouble as well. We have seen consumer demand wane for a lot of its products as well. As you can see here, wave after wave to the downside. We are seeing possibly a new low for Apple, but if we're just looking on the technical standpoint, we aren't really seeing any divergences on the RSI or the MACDs that we're using. We're looking at the Ichimoku cloud for assistance on this, and we are seeing that there is a bearish really bearish market at the moment due to the fact that prices are weighing down so heavily under the cloud. If we go into the 4-hour chart as well, we're seeing now, as you can see on the chart, very choppy, very inconsistent pricing. But after this area of consolidation here, we got a fresh low. It looked like we bounced up here, we had this area of consolidation, and then we move below this area because it was a confirmation that prices were going to start moving to the downside, especially as we cracked the $130 handle. Very, very significant psychological level here. And then, as I said, yesterday's trading was very, very detrimental for Apple. So just keep an eye on the headlines affecting this. We are seeing a slight bullish divergence on the RSI, but it's only slight, which means it might not last very long. We could get a slight upturn if we break this particular $130 area. Then prices could start moving higher, but at the moment the realistic scenario is that prices will start possibly moving to the fresh lows to test them once again. So this is what we're looking out for. So let me know what you think, and we'll speak tomorrow for the latest in the next stocks and fundamentals. Bye for now.